Hi there traders, this is Steve Miley, the market chartist for FX Explained, and this is the week commencing the 22nd of February 2021, our regular weekly MacroWatch update. Higher yields see stocks dip, US dollar weakness resumes. So first of all, let's take a look at the macroeconomic and geopolitical developments over the past week in here. Well, the Democrats' COVID relief bill did see some progress in the last week with the full text released in here. And we've also seen Treasury Secretary Janet Yellen call for a more aggressive package in here. The real significant impact we saw on markets were for global yields to have gone still higher. A belief in the whole reflation of the US and global economy, seeing a sell-off in bond prices, pushing yields higher, US 10-year yields higher here, global yields going higher across the board in here. If we look at Germany, throughout Europe and the UK and elsewhere, yields pushing significantly higher. And that's in the belief of both the reflation trade and of anticipation of maybe a less dovish, so de facto more hawkish central bank, certainly from the Fed and potentially elsewhere. This in turn, then the concerns around higher yields and potentially higher interest rates has slightly weighed on stock indices, which have really taken a pause in here over the past week or two. Here we're looking at the DAX in here very much sideways in the last week, initially higher, then lower, and then rebounding again at the very end of the week. So a more cautious tone for global equity indices over the past week. We'll look at that in more detail. The European vaccination program has improved, but it's still lagging way behind what we're seeing in the US and particularly the UK, which is continuing with its very impressive rollout of the vaccination program. Global lockdown measures and the vaccination programs, though, are still having a significantly positive impact on the cases, hospitalizations and deaths throughout the UK, throughout Europe, throughout Africa and throughout the Americas. So certainly a positive, and throughout Southeast Asia as well. So all of these measures in here pointing down in here since new lockdowns and since the rollout of vaccinations throughout 2021. And we're going to be watching out this week as well in here for further lockdown easing potential in here, with the UK Prime Minister Boris Johnson outlining a path out of the current lockdown on Monday, due in here Monday at 1900 hours, 7 p.m. GMT. So let's take a look at the global financial market developments of the past week ending the 19th of February. Well, as we've looked at already, higher yields across the board in here. Here's the US 10-year surging up, having already pushed up above 1% and 1.10, now breaking through 120 and 130 in the last week for the US 10-year yield. Equity markets are more cautious. The S&P 500 did hit a new record high at the beginning of last week, but then dipping back lower and a more cautious end to the week. And again, as we looked at previously, the DAX been kind of sideways in here really over the past 1 to 2 weeks in here throughout much of February. The US dollar has been mixed. We did see early strength last week and then weakness again. So potentially a slightly negative US dollar spin going into next week. And we've also seen other currencies, the risk currencies, do particularly well against the US dollar. It's not just the weakness of the dollar, the whole reflation trade, the surging commodities, seeing the risk currencies, Australian dollar, New Zealand dollar, Kiwi dollar and the Canadian dollar all doing well in here against the US dollar over the past week. And the Australian dollar versus the US dollar, really the big standout in here, surging to a new multi-year high above highs set previously in the very start of this year, 2021. Elsewhere, the pound stays strong. The very impressive rollout of the vaccine program in the UK, plus not too many negatives on the overspill post-Brexit at the end of 2020. All of that leaving the pound strong in here. And not just the pound strong here against a weakened US dollar, where cable GBP USD broke above the 140 psychological level, but the pound also rallying against its European counterpart in here, the euro. So euro versus the pound plunging still lower in here again, down through 0.87 in here, down to its lowest level since March of last year in here, with significant EUR GBP sell-off. Turning to the commodity markets in here, the oil surge that we've seen since the beginning of February has extended. The situation in Texas certainly having a positive impact on oil. We did see an oil the oil price dipped lower at the end of last week, but only after a significant push higher. And oil strength through the reflation trade, the belief in the global recovery, alongside restrictions on supply, notably Texas in here, has seen the oil price stay strong. Copper has had a really aggressive push higher, having broken out the week before above resistance levels from the early part of 2021, from above the 2021 peaks. A really aggressive push higher at the very end of last week for the copper price on COMEX. And we've seen gold stay vulnerable despite US dollar looking weak as well. Gold has stayed vulnerable to the downside, pushing down through lows posted in November over the past week in here. So gold still looking vulnerable as we move into the latter parts of February. Let's take a look now at the week ahead, the week commencing the 22nd of February 2021. Well, we're going to be focusing on the Democrats and progression of President Biden's COVID relief bill, looking for that to make some ground in here over the next week. We'll also be monitoring for possible easing of lockdown measures, specifically on the announcements from Boris Johnson from the UK on Monday. Watching out for that COVID data globally in here regarding cases, hospitalizations and deaths as ever. And also still watching for any new announcements from either new vaccines, the efficiency of the vaccines, and then also looking for progression on the rollouts we're seeing of the vaccination programs amongst the major economies. On the central bank, with our central bank watch, we only have the Reserve Bank of New Zealand in play this week, where they have their interest rate decision statement and press conference on Wednesday. And moving then to the data for the week, the macro data, we have the German IFO business climate Monday, New Zealand retail sales and UK employment data, followed by EU CPI Tuesday. We get that RBNZ interest rate decision on Wednesday alongside German GDP. Thursday brings the EU consumer confidence, US gross domestic product and durable goods, and weekly jobless claims data also from the United States. And then we finish off the week with US personal consumption expenditure data. I'm going to wish you all a great trading week. Please do stay out there. Don't forget to follow us on our YouTube channel in here and like this video. I'll be back with you next week for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.